Hey traders, Raghee here, and in this update we're going to talk about two markets that I am looking at in front of tomorrow's FOMC. The first one is the UUP. Now there's actually four different ways you can look at the dollar play. Of course, we can go with the dollar index, but the challenge with the dollar index is that you need the ICE exchange, which is not one that most brokers offer without you having to pay the ICE fee, which is a pretty sizable one, but you get access to some pretty cool markets like the dollar index. I will play UUP or DX futures when I feel that the US dollar, or when I see, who cares what I feel, right? When I see that the US dollar is outperforming a number of currencies. Let me show you how we do that. So if I look at, say, month to date or the quarter, a month, look back on the dollar, I want to know that we have general dollar strength over a number of other currencies. And so the dollar relative performance, most especially because of the weighting of the dollar index, most especially versus the euro and the yen, is super important. You might say, well, Rog, it's kind of in the middle here. It's not super impressive. But it has to be impressive against the euro, which is about 58% of the weighting, and the yen, which is about, I think, 13 or 14% in that area. That's most of the weighting right there. So as long as the dollar is stronger than these two, you're in very, very good shape for potential follow-through on dollar strength. So that's when the UUP would make a lot of sense. Now, if you want a more binary trade, in other words, just a strict setup against one of those two weak currencies, you would then look at either the 6J for the yen, the 6E for the euro, and in either one of these you would be selling rips. You would be getting short the 6J, the 6E on a rip higher. In other words, how would a rip higher in either one of these markets trigger? With dollar weakness. So if the dollar gets weak, I can buy UUP, I can buy DX futures, or I could short the 6E, I could short the 6J. Now maybe you want to stick with the ETF, the way we talked about UUP. Well, that would be the FXE, where I would recommend, as long as we can stay below the 55 exponential prop dot on a rip higher, I would look at getting long FXE puts, and on a rip higher I would consider getting long FXY. One of the reasons I like FXY and the 6J, for a couple reasons, more than I like the 6E or the FXE, is because the yen will continue to weaken if we have strength in equities. The yen is a carry currency. It's oftentimes borrowed or sold in order to fund the purchase of higher yielding assets, usually stonks, right? So if I'm going to look at the equities markets and their uptrend, which we're seeing most especially in the ES, forming once again in the NQ, now the second session with green over green, now the second session with green over green in the YM, this is going to keep the yen weak, and if the dollar is strong, FXY, 6J are really, really good. This is the currency way to play a central bank event. The last setup, I actually said two trades, but really one currency group of trades, and then the last is no longer focusing on the ZB or the TLT long bond, focusing on the 10-year note. The structure is better here. I'd like to see a rip higher in ZN. I will look to short into that. I want to see it preferably remain below this volume ledge, definitely below the 55. If it retests the Darvis right here, that's fine with me as well. As long as we're really below 130, 130, ZN for shorts is perfectly fine. Or I'm going to look at the, here we go, IEF. I will look for puts on the IEF with a similar rip in the ZN futures. That's what I've got on tap for tomorrow. Let's use the volatility of the FOMC. I'm not going to front run. I'm not going to guess at what's going to happen. Remember, trading is counterpunching. Let's know where we want to buy or sell. Let's not go down the rabbit hole of, well, what's the market going to do? Let's admit we have no idea. That's okay. I've not had no idea about what the markets are going to do tomorrow or the next hour for my entire career. I've never deluded myself to think that I do. I can find the path of least resistance. We can find structure. We can find clarity. We can find decision levels and then react to prices when they get there. So let's look at it this way. I don't know, the World Series is wrapping up, looks like pretty soon. I don't know what the pitcher on the mound is going to throw my way. I just know there's going to be a pitch. I can speculate what it might be, but I really don't know, right? All I know is I want to spend as little time as possible finding out what that pitch is once it's thrown. I have just moments to figure out what that pitch is and then react. That's what trading is like. We know the market's going to throw something at us. We just want to know if we can recognize it and then react. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.